Hi, Maximus Analysis here for April 7th, 2016, and we're starting with the ES daily. And you could see that, again, we had a, a down day, and it's been pretty choppy, but they held the 2025-50 area that I posted on Twitter this morning, and we need to see them hold above this 2019-25. That's actually last week's low, and if the bulls really going to run this up, and we'll see if they have enough juice, they need to get it back above 2048 tomorrow. Again, we don't want to see any follow through to the downside, and I'll show you why on this weekly chart. So right now we have lower highs, and again, we've been talking about just making sure we're not losing sight of this, and a break of this low of 2019 means we have a sell signal on the weekly time frame, a break of a previous low, and we have a lower high. Again, for them to come and test this area again would be critical. Again, this is our bull trend line. Again, they stay above that, and we know we're in a bull market. They get below this, and again, the bottom of this, pretty much this channel right here, is the 1805 area that I think they tested last time, right before this hell of a run. So we can have to continue to see where they're going to close this going into tomorrow. Again, we only have one more day. So let's also look at the NQ on the daily time frame, and again, they want to hold this 44.56 level, and the bulls want to get above, of course, the 4,500 level. Again, we don't want to go back underneath this level, because then it's just a false breakout at previous, well, what was support now becoming resistance. So we'll continue to watch that one as well. The YM, again, we know our levels here, which are the 17,250 area that we want them to hold, and again, the 17,000. CL actually didn't do that bad today. I thought it was going to, it actually looked like it was going to close weaker than it did. So again, holding the pivot, which is basically 35.30, excuse me, yes, 35.30, and of course holding above that psychological $35 mark. Now let's look at some equities. Let's start with Apple on the daily, and we can see that we got back to the 200-day moving average, and they didn't pierce it. So let's look at the weekly to kind of clear some things up, and you can see that we're having a nice retracement into this previous area. Fib would probably put you at 50% of the range, so let's kind of see what we got going and what levels they need to hold. Again, on the weekly time frame, we want them to hold. Again, for tomorrow, we have 108.30 and 105.68. That's for Apple. Let's look at Amazon. And Amazon, again, it's annoyingly sideways right now, being that you wanted some follow through and you ended up getting a gap down and just I don't know if this is a harami pattern, but somebody help me out here. I'll try not to remember too many of these Japanese candlesticks, but we want to see what side of the fence they're going to break. And again, we're looking for them to hold this 588.56 area that we've been talking about for a while. And on the weekly time frame for Amazon, again, it's probably not as overbought as I would like to go short, but we'll continue to watch it and go from there. So let's also look at Google. Google, again, it's fighting its way sideways, which again, you have to be on the side of the bulls, but it still seems that we're still talking about this 756 area, which is very annoying. Sideways movement, if you go on a weekly for Google, it ends up being kind of the same kind of deal going on. Want to see what if they hold last week's low, which is 748.29, and then see what they do. So again, it's just an inside bar. We'll kind of see where things go. Again, we're up. Let me count how many bars we're actually up since the low. We're up about 7 weeks. It's going to be almost the 8th week without a significant close below a previous low. So let's see. Again, the volume, we want to see what's going to happen with that. Last but not least, we will talk about Tesla, and Tesla finally gave some type of sell signal. So you got what would be considered a dark cloud cover, meaning that dark cloud cover means that you gap up, and you can see the gap up here for the Japanese candle guys. The gap up is here, so this is where we closed. We gapped up and we closed more than 50% into the previous candle's range. Okay, so you can see 50% here. Oops, let me get it. 50% here of the previous candle's range. So you see we closed there. So now it's just what we really want to look at is actually the weekly time frame. So the weekly time frame, we want to see them not get close to 250 tomorrow. Okay, the reason why is because this candle, if it closes near 250 or 248.67, it's going to end up closing like a shooting star. So let's kind of look where that price level is. So 248.67 is right here. So that brings it all the way down to either a doji, and let alone we don't want them to close in the lower half of the candle, which would be around this 247 to 46 area, and that will make it, you know, a shooting star pattern for most likely. Again, ideally you want it to close near the lows, which would be 240, but we'll see what happens in the overnight action. We've been having that type of market. So again, aggressive time frames, really looking for oversold or extreme type of trading is kind of where things are going from here. So going back to the ES, we'll see what they do overnight, and that's all we can do. So again, continue to look at it, and hopefully you know, things are going well for you guys. Again, don't get chopped up, and again, it's an environment again for aggressive time frames. And some of you might say like, yeah, it was aggressive, but it went all the way up, all the way up. Yeah, but there's days like this that I prefer you listening to me, right, and say aggressive time frames, so your stops are smaller. It's not to get more, you know, you don't get small stops to get more active. Like, I don't want you to go from, you know, you have smaller stops to maybe 1/4%, but now you're doing 4 times the trade. That's not what this is for. This is to help you to say, okay, if you want to get in, that's fine, but if you know, let's make sure we're looking at all time frames. That's why I'm looking at the daily and the weekly, because on the daily alone, you're like, oh man, we just a little tap on this 200 day, and it's by the dip time. But on the weekly, you know, looking at the higher time frame, you're saying, okay, there's a little bit of caution because we still have these lower highs in place, and if they come down and test these previous lows, that'll be the 4th time they're going to test it. So again, that's another thing that we want to look at. So take care, and we'll see what happens tomorrow.